Okay, good afternoon, everyone. I just want to do a quick check here. I'm on the briefing earnings page. I want to make sure you can see that. If you can, please type earnings or briefing. This way I know. Okay, perfect. So we know everything's working because we'll look at some earnings today. But I was just kind of jumping through to see if there was anything in particular that stood out. But the real beat to me was right here, Alexion, 168 versus 150. And we go over there, and it's up 11%. So that's a nice move, a nice beat. Okay. All right, let me just get the PowerPoint going. What we're going to do again today is I'm going to go through the slides and the charts. Okay, and then we'll go look at some earnings because, we are in the heart of earnings season. So this should be pretty interesting. There's a couple of deals that have been moving pretty well today. Facebook is one of them. CMG is at a radical move. So we'll take a look at those after I'm done. But anyway, welcome to the webinar. Today, of course, is April 26th. And as always, we're going to start out with the monthly view. Now, here's where it's getting kind of interesting, okay? The upper band is 2574. I don't know if you can see this up here, but I'm going to draw it in. The low this month has been 2553. So we actually traded below the upper band on the monthly chart by about 20 some odd points. As of right now, we've recuperated it and we're back above it. Trading, this was as of yesterday. Yesterday closed out at 2639. So again, to me, this is a really radical price level. Okay, because it's going to tell us, where the market's going to go in the short and probably longer term. And when I say that, what I mean is this: if we do have a close back underneath the upper band, I expect a fairly deep pullback. Now you can see from this chart, this monthly chart, that the next support line is about 400 points away, which is the 50. Okay, and the 50 is where the market stopped the last time. And I guess you could say here it kind of stalled there too. But right now, we still have massive chicken money flow here in the instrument. Okay, and at this point, we still haven't closed underneath the upper band, so we have to continue to respect the upside. Okay, for the Dow, we're at 22,655. This to me is even more radical because, the low this month didn't even come close to the upper band. And on the comp, upper band is 6588. Now, again, low this month was 6805. So it's still 200 some odd points above the upper band. All right, now we get into gold. And, I keep saying this with gold that I expect, I don't know, some sort of a breakout or breakdown. But I mean, this has been now 5 years where gold has really traded in this immense sideways channel. And, just when it looks like it's going to break out to the upside, it just kind of stalls and putters out. And that's what we're having here for the last 3 months. So, again, my inclination is gold probably tests the lower level. And, if it breaks through that lower level, then to me, the target's down to the 200. 200 is 1037. So that's about $300 below where we're at. All right, now Apple upper band is 159.50. The low actually got about $2 above that. And right now, we're only trading a few dollars above it. So again, Apple, what's interesting about the Apple chart here is that you can see the last two times it broke underneath the upper band, the 50 EMA held the support. All right, the 50 EMA now is roughly 123. So that's about $40 below where Apple closed yesterday, which would probably be an interesting area to dabble on the long side. All right, now here's the light grade crude. Again, crude broke through the mid band. I believe targets to 75 on the XLE, and we'll look at that in a little bit. All right, now we scale down to the short term. Okay, here's the S&P 500, the daily chart. And again, I wanted to show this because I thought there were a couple of critical things happening here. Number one, we know we broke out above the upper band. Okay. The critical support line at the moment is 2650, 630. And the market's kind of snaked around that line. The other critical support line is the 200 EMA, which now reads 2608. And you can see the low so far, this was as of yesterday, came to 2612. So the market on this last little pullback came to within $4 of the 200 EMA. And again, I say that because the last two pullbacks here, that one and that one, both held at the 200 EMA. So now we know if it breaks under the 200 EMA, the most logical support level is the mid-band, which is 2568. So it's really not that far from the 200. It's only a 40 point differential. But to me, that's where the market would naturally gravitate towards. All right, now, here's the shorter term numbers that we track every week. Okay, here's the major 25.50, 630 line. Okay, 26.30, 675 is the downside line to 25.78. The upside level is 27.34. Now again, the blue lines are the confirming lines. And I thought what was interesting was we had a close underneath 26.36, but it managed to recuperate that yesterday and closed above it. Okay. Now, these numbers represent a little bit longer term view. Okay. The major line on the upside is 28.12. Hang on one second. Okay, well, thankfully they hung up. The major line we're trying to recuperate is 26.50, 630. On the downside is 2,500. So and again, this is the slightly bigger picture. So when we look at these numbers, on the downside, the key number is 26.17. All right, and we closed. Actually, we got as low the other day as 26.12. And I don't believe we closed under 26.17. But to me, if we did have two closes under that, I believe the market would have tested 2,500. Okay. Now, I also believe at this point that the first time the market does drop to 2,500, it's going to offer strong support. So I really expect a pretty strong support level down at that price level. And again, we were looking for on the upside, ultimately, this market to go to 28.12. So, I'm still biased to the upside. And, obviously our numbers will continue to help us to determine if these objectives get hit. Here's the VIX. This is the 60-minute chart of the VIX. You can see the VIX crossed into a downtrend. Now, the one thing I've been saying, and I've been saying this now for, I would say about 2 weeks, is 1875 should be resistance. And it's kind of interesting because even with that big downdraft the other day, the VIX got above 1875, but it couldn't close above it. And it quickly dropped below it. So now what we're looking at is a scenario where 1719 is the downside level of 12.5. Okay. And I pulled this back, by the way, I pulled this off this morning. You can see we were trading at 1705. So we were, in fact, underneath that level. Okay. Now, again, we have two closes under that. I do expect the market to continue up, and I would expect the VIX to head down to 1250. All right, here's the GDX. Now, again, this is a daily chart. All right, now the critical things here on the GDX is simply this. Number one, it's crossed into a downtrend. Okay, the major level right now is 20C66. That's the major resistance line. And what's interesting about that is the mid band is within 10 cents of that. The mid band is 22.59. And you can see this chart, it's broken underneath the mid band. So right now, I would expect that level to be resistance. Now, the 60 isn't an uptrend. So probably what's going to happen here, here's your 2266 level, 2188 on the downside. Okay, you can see money flow has turned negative here. But most likely what's going to happen here is it's going to bounce around until the 60 crosses to the downside. And then here's the diamonds. You know what? I'm going to start showing the diamonds and the numbers on the diamonds because I think it's more relatable. And obviously, too, you know, this is the instrument you trade if you were trading the Dow index. So anyway, what's interesting here is this, couple things. I mean, the bottom basically stalled a point underneath the 234.38 level. And you can see how it ran up 1, 2, 3, basically 4 levels. And this little pullback's been basically 2 levels, almost 3. So I do expect the 2-level move back up would be the minimum. And then it will tell us if this market should continue up, if it can break through the second level, which is 243.75. But I think what's interesting about using the diamonds is the fact that, you know, these levels are really pretty good on the diamonds. All right, here's the Qs. Okay, now again, this is a daily chart. What's interesting about this chart, a couple of things. You know, as we can see, it did take out the upper band slightly. The 2 pullbacks we've had stalled just above the 200 EMA. And this is basically what happened yesterday as well. But the only thing of note right now is the fact that money flow is flipped negative. I mean, I'd really want to see money flow turn positive, you know, to see that the bulls are back in charge. But if you look over here on the left side where I have the circle, the 200 EMA is 154.43. And again, we didn't quite stop there yesterday. We stopped 2 points ahead above it. But again, that has been basically the support area. Right now, we scale down to the 60. We see that the 60 had crossed down beginning of April. Okay, we have all the lines that the resistance levels that the Qs have been trading through. The pullback here basically stalled at the 156.25 level, and we're back to testing the 159.38 level. Okay, and then here's Apple. Okay, you know, this chart's kind of interesting because I wanted to show this because when Apple rallied up here in April, okay, it topped out. But if you look at the top here, on the top of it, when I say top of the chart up here, money flow was negative as the stock was rallying. All right. And what's interesting is, you know, if you look at this, this was like a $17, $16 swing, basically straight down. So the conclusion here is this: even though Apple's in an uptrend on the daily, when a stock rallies and tops out and money flow is negative, it's usually a pretty good sell signal, and you really want to dabble on the short side. And here's the short-term 60-minute, and again, you can see the 60 was in a downtrend. Okay, somewhere back here it crossed. The dotted blue is the 200, right? And the green here, oh, I'm sorry, it's right there. The green line is the 200. The dotted blue is the 253. So when Apple rallied up here, it got above the mid-band, but it was in a downtrend. Okay, and then it broke, and as I said, in about a week, it dropped $16. All right, here's XLE daily. Okay, we know the XLE had taken out the upper band. Okay. And basically for 2 months, it just traded, basically bouncing around the 200 EMA, I'm sorry, between the 200 and the 253. And, once it started to break out, we know that a retest to 75 is what we were looking for. I think today we're just under that. All right. So, we get through 75. I'm looking for a retest of the upper band. All right. And then I would expect probably a pullback and then a move back up. But 75 is a level that's key, okay? Because if it gets through 75, all right, then I do expect, I expect at least a retest of the high on a pullback. If it fails underneath 75, that would be concerning me. So we'll see if it does actually get through 75. All right, that's what I wanted to cover today. Any questions on the handouts? If not, then what I'm going to do is go over to some of the other things that I want to cover. Okay, I don't see any questions. Kind of interesting because, these markets have been following our numbers. And and obviously that's a good thing. I mean, we were biased to the long side on the XLE, and that proved to be the right call. All right, here we go. Here's the XLE, 75.34 right now, and I want to see the GDX. All right, so the GDX is 2261. It's trying to hold that 2259 level, which, as I said, we've got the resistance line at 2266. So this is going to be interesting to see if it breaks through it. And by the way, here's something to consider, all right? This instrument is trading virtually right at the mid-band, okay? Now, the million-dollar question is, does this break out or does it break down? Okay, we know it's going to do something, okay? It's not going to just sit here forever. But the strategy could be to simply straddle an instrument like this when it's at the mid-band. Now, again, if I were to consider a strategy like that, I would buy a little time. Okay, I wouldn't use weeklies. I would go out maybe 2 months or 3 months, preferably, and just let the instrument do what it wants to do. So what you're doing is you're not guessing on direction. You're just guessing on the fact that we expect the instrument to move, and that's typically what it does. Okay, I mean, if you look here back in December, back here, once it was trading around the mid-band, let's take a look at this. That price level there had a high at 22.75. So it basically moved up $2 to the top. And then what's interesting is when it sold off, it came back and was actually below this price. So, if you could just trade these straddles, right? We know when it got high, it's probably going to come down. And the logical retest after it failed over in here, you had this little pivot high, then you had this, which was the real pivot high, was back to the mid-band. So say you had bought puts here, right? Now you could turn around at the top, sell your calls, and maybe put an uneven straddle on. So say you buy 4 puts and buy 2 calls. And I'll bet you by the time it crashed back down, all right, you might have gotten your money back on the first set of puts. You certainly would have made money on the second set of puts. But, more and more, I think that this is a strategy that makes life simple as opposed to trying to guess on direction. Okay, because, again, we're right here, right at the mid-band right now. Now, we've got a couple of bearish things going on here. We've got the CME negative. We've got the PPO starting to turn negative. MACD just turned negative. So this is kind of interesting in the fact that, okay, if you were to take a directional trade, maybe you do an uneven straddle. So you buy, say, 4 puts and buy 2 calls. But anyway, it's just something to consider where you really don't have to think a lot, which to me is always a nice thing. I keep in my mind, I keep thinking to myself, okay, what strategy can I employ that doesn't require me to think? And, this is one of them. Where you just simply straddle it when it gets at the mid-band. All right, let's take a look at some of these earnings. Okay, let's take a look over here because I did price out. I priced out 2 yesterday. I priced out CMG and I priced out Facebook. Okay, so CMG Facebook closed at roughly 160. These were the at the money puts and calls. They totaled $9. So the market was looking for roughly a 6% move. If you goose that up, 50%, you'd round it to 9%. Now let me just see. Okay. Oh, so now this is interesting because it beat the market maker's projection. It's right at 944. Now, if I look here, obviously the call side is the one in question. So if I look at this and I priced it out and said, okay, let's go the 150%, it would bring you to selling the 175, right, and buying the 180. That would have given you a 23-cent credit. All right, so right now it's and by the way, on the downside it's 145 and 140. There's a 22-cent credit. Okay, so obviously you're not even concerned about that because the odds are tremendously low that that's ever going to get hit. But if we go over here to Facebook, take a look at Facebook now. Let's see here. And for giggles here, I want to see what the 175 call's trading at. All right, so the 175 is now $1.12. The 180 is 16. Okay, so now you're underwater. Okay, and you only received the 23-cent credit. If you were to close this, it's going to cost you call around it to $1. So you're losing 80 cents per spread. All right, now the question becomes, Does that make sense right now? All right. So what we want to do is look at the intraday charts and see if Facebook is going to continue to run or is it going to pull back. All right. So we have the 30 above the upper band. We have the 10 right at the upper band. And we have the 60 nowhere near the upper band. Okay, now here's the point. I think this is what makes this kind of interesting is this. We look at the 60's in a downtrend. The 60's got negative money flow. We're sitting at the upper band on the 10, negative money flow on the 30. Okay. Now, if you were long that spread, would you close it now and take that loss? That's the question you have to ask yourself. Okay, you'd be down, say you put a 10 lot on, you'd be down roughly $800. But you picked up another, if you did a 10 lot on the put side, you pick up another 20, so roughly 220. So you're sitting with about a $600 loss right now. That's your maximum loss. All right. So the question becomes, do you book that loss or do you consider another strategy? And quite honestly, looking at this setup with the 60 in a downtrend, negative money flow, I think this is going to pull back. So I'd wait to see if it breaks through this upper band on the 60. I'm sorry, on the 10. And I see the 10 with negative money flow. I see the 30 with negative money flow too. So if we go to the let's take a look at the put side. Wow. These are expensive. The 175 puts are I call it 220 just to round it. But look at all the volume coming in here. The 170, you've got 25,000 contracts today. 12,000 of the 175s. All right. Let's take a look at the call side today. You got 25,000 on the 175. Interesting. We're getting just a tremendous amount of volume. But to me, I would expect a pullback here. Okay, just looking at this and looking at the various alignments here on the trends and the shake in money flow. And again, today is Thursday, so you have one day. You basically need Facebook to stay under 175 to book your maximum profit. Now, the other deal I looked at was CMG. And by the way, I ran through the numbers on CMG. Market makers were projecting a $24 move. I add a 50% cushion, it comes to 36%. The 150% move would be a 10.5% move. Now, if we look at CMG, look at that. It's roughly a 25% move right now. So this is one that you would have absolutely lost on the call side on. Now, I didn't price out the options because they were so thinly traded, the out of the money ones, that I wasn't even getting decent bids. So I didn't even bother doing it. But which is a reason for me to have stayed out of CMG to begin with. But my gosh, this thing just took off. So the at the money yesterday, so this is kind of interesting because the at the money call was the 340. That was 850 yesterday. They have to be, wow. Let's take a look here. They're like $81. So think about that. That call was $8.50 and went to $81 today in one day based on their earnings. Now the question is, would you have been biased to the long side or put a straddle on? I mean, to me, I don't know. Okay, adding the 50% cushion and selling out of the money, you would have lost. And again, here's a perfect example of a chart where we've got negative money flow, we've got a downtrend. So technically, the bias would be to the downside if you looked at simply the chart. And lo and behold, they report and scream up 25%. So you'd be absolutely murdered if you just did a straight out put. You would have lost if you did the out of the money credit spreads too. And quite frankly, with the extent of this move, I wouldn't even expect the upper end. Well, the upper end strike on the call was 35, so it would have been like 375. Right now, it's trading at 422. So if you had sold the 375 and bought the 380, I mean, there's probably no way CMG is going to pull back that much in one day, not on that strength. Let's take a look at the 60 here. Wow, way above the upper band. Oh, this is interesting. Same thing on the 30. Same thing on the 10. Let me just check Facebook. Okay. Still staying on the 175. This is interesting, how far this moved. I wonder if they had their conference call. They must have. This reminds me of that day it had an intraday range of like $80. Because that day it was so stretched out like this as well. Let me see something. Let's take a look over here on Yahoo. We're trading at 422. $377.5 puts like 30 cents. I'm just trying to figure out if they had the conference call. Well, I don't know. But you can see this is really stretched out. I mean, this is one to watch to see if it starts to break and pull back. Interesting. Any other ones we want to look at? That's what I wanted to cover today. So, I mean, again, you can see how this whole credit spread strategy, even adding a 50% cushion, it's not infallible, okay? And, the problem with credit spreads in general are just like this. You could have one deal where you lost the full freight, okay, in essence. So in this deal, say you're down in total on a 10 lot either side, you're down roughly $600. Well, if you're only collecting 22 cents each side, that's 440. So basically, you have to have 2 out of 3 winners to be profitable. Now, is that possible? Yes, it is possible. I mean, we can see how Facebook, I mean, Facebook right now, you'd be a little nervous because it's sitting right under the strike you sold. But technically, it's sitting at levels where, resistance should come in. Interesting. The Chipotle I'm going to look at. All right. Any questions? That's what I wanted to cover today. Oh, let's take a look at the VIX before we sign off. All right, there's your 10-minute on the VIX, sitting right around the mid-band. We're looking for 1719 today. And look at the S&P. All right, so the S&P is coming back to where we would expect. And by the way, there were a number of stocks yesterday. When this market sold off, like Amazon was one of them. I was looking at it. Look where it stopped, right at the lower band. On the 10. Now, I'm not suggesting you would have traded Amazon because they do report tonight. And we do have a couple of big guys reporting. We've got Amazon, we've got Baidu, Western Digital. So we got a couple of companies that could make some really nice moves. But yesterday or the other day, there were a lot of stocks kind of clinging to the lower band on the 10 when the market turned. I mean, obviously the market itself did that. All right. If I look at the diamonds, same thing. I think Google gapped up. They did stop there. BKNG, let's see what they did. All right, BKNG, look at that. It's about a $60 move off that. But again, very expensive calls, even on the weekly. Okay, anyway, listen, guys, I'm starting to putter out here on my voice, but I want to thank you for being here, and we'll see you again in 2 weeks. Thank you very much.